Good morning, good morning. Happy Friday to everyone. It's Sanjay, your local property agent, one of the Avocado property partners, and I'm here with my monthly mortgage update with my own personal mortgage advisor, good friend, and just all-round knowledgeable guy, Uncle Dave, David Howard from AFP Wokingham. How you doing, sir?
I'm good, thank you, Sanjay. God, call me a friend at last. It's only taken a few years.
It took a while, but we got there in the end. Right, for
Absolutely,
anyone,
you're a tough nut to crack.
there you go. If anyone's tuning in and you're watching this conversation is going to be for anyone who is looking at moving, looking at potentially getting a mortgage out, probably doesn't understand. So first-time buyers is going to be great for you, obviously, with what's going on. First-time sellers, equally as important, especially if you haven't done this side of it before. And anyone in general who might be just looking at moving and needing that bit of financial help or update, we're going to give you a lot of value today and go through some points. We usually do this monthly on the last Friday of every month. However, we wanted to wait till the budget went past this week because obviously there's going to be a lot of changes. So we're slightly late, but we're here anyway. Right, Dave, let's get straight into it. Hey, big week this week. Budget was announced, stamp duty holiday, 5% deposit mortgages. Talk us through what's going on with these 5% deposit mortgages that they've introduced. What are they and how do buyers access them?
So if I'm really honest, Sanjay, there isn't a massive amount of information available about them just yet. The government have announced it. We expect it to be the same as the Help to Buy guarantee scheme, which was in place probably 5 or 6 years ago.
Yeah. Oh, we're live TV. We might have lost him. Right, we'll wait for him to come back. So basically what Dave, there you go. This is live TV. Can you, yeah, Dave, sorry, you just blanked out there a little bit. I thought I was boring you.
Sorry, Sanjay, am I back now? Yeah, there we go.
You're back now, you're back.
Probably the boys on the Xbox.
There you go.
What we expect from it is the government will basically guarantee that if a bank does a house with a 95% loan to value, 5% deposit for the customer, should that customer fail to pay and the bank have to repossess the property, if the housing market has declined and that repossession means the bank can't recover the amount that they've initially lent, the government will guarantee the difference. So it's more the government backing the bank itself on repossession shortfalls than anything else. Now, that's what we presume. That's how it was when they last introduced this type of scheme. So, like I say, they've said it's coming. The banks are very much working out what their interest rates are going to look like and how they're going to structure it. They've got a lot of systems to change. But hopefully by the 1st of next month, we should have some good deals to offer people.
Yeah. So what we're talking, April?
I think 1st of April is the date everyone's working towards. Yes, indeed.
So 1st of April onward. Can you give an example on now obviously with the lower deposit, on a £300,000 house, what would a buyer need to have in terms of finances? If obviously we can go into this 5% deposit mortgage.
So 300 grand, 5%, £15,000. That's your starting point on the deposit. To get the mortgage of that size, previously, when this was happening, it was around 4 to 4.5 times income that you would have needed to get that sort of mortgage. They're a bit tighter on their income multiples. So that would mean a couple probably need to sit around the £65,000 mark to get that. But that's joint income potentially.
Joint income, yeah.
And this is all pie in the sky at the moment. I can't make any promises. No. But I'm going back to how this was 5 years ago and trying to sort of remember the criteria from them, which we expect to come back. Yeah. The only caveat there is at the moment, 90% mortgages, you've got to have 4.5 times income. That's where they're kind of capping out. So I'm not sure if 95% is going to be more strict or not, but we can only go with what history's told us.
I mean, give us an example. Obviously, take you back 5 years ago when these were available. If I was a buyer and I was looking to get that mortgage out, what kind of repayments roughly would they be looking on a monthly basis? Because obviously that's what it comes down to. You know, it needs to be able to, the buyer needs to be able to afford it monthly. That's what I always look at when I'm taking out mortgages.
Yeah, well, back in the day, then I think you would have been talking 3.5%, 4% interest rates for those 95% deals. Right. If we see them come back at that sort of level, maybe over a 30, 35 year term, £1,300 a month, maybe £1,400 a month. You are putting me on the spot a bit there, but
No,
it's
we're just
around that kind of level, I think.
yeah. I mean, we don't know for facts these certain these rates at the moment. We don't know exactly when it's going to be launched, but obviously Dave's the expert in mortgages. He's just going back to what he did 5 years ago with these. So no, it's good.
Yeah, we think it's going to be similar, so I think that's probably a good starting point. But watch this space. I'm sure me and you, Sanjay, can have a bit more of a catch up once we know more.
Absolutely. Right. Got just a couple of questions which we'll fire in before we go to our later points. Ian, good morning. Morning, gents. Will property prices go up this year? Straight to the point. I mean, it's almost like how long is a piece of string? We don't know. I mean, my personal opinion, and I always like to play a bit of devil's advocate on this because if you don't, you don't know. But I don't know what's going to happen. What I think is going to happen is I think with the stamp duty incentive still in place, I think prices will still stay high. I think if they are, I know they're tapering off until the end of September. Come the winter, the bulk part of the year, the summertime, springtime, people love moving just because the weather's good. It's a good time. I don't know, but I think there's going to be a dip later on in the year. What do you think, Dave?
Sanjay, what do you think about the first-time buyer market? Because that's been pretty stagnant, hasn't it? Any properties valued, I don't know, 200 or less have been hard to sell. I'm talking out of place. But now the 10% and the 5% deposits are coming back. That might ignite that end of the market a bit.
Hold on, I'm supposed to be questioning you here. No, I'm joking.
I'm just putting it out there.
Yeah, no, look, we're both experts in our own field. So basically, first, I have a big opinion and empathetic side to first-time buyers because they've had it hard last year. Like properties were apartments were coming on the market thick and fast and they were struggling to sell. So first-time buyers and first-time sellers, the mortgage rates, as you know, they weren't there last year, but now I've seen a massive increase in first-time buyer activity. Rightmove reported it. There's been a massive increase in first-time buyer activity coming into April. It's going to be even more of an increase. So we need first-time buyers in the market to be able to push up the mid-range 300 to 400 to 500,000 properties. Otherwise, it just becomes stagnant. It's a ripple effect, as I say every time. So I'm always pushing and, I'm on first-time buyer and first-time seller's side all the way through. So I think that will make a big difference. But then again, come the end of the stamp duty, I don't know. People might take a little bit of a lull. I think, we'll come to the stamp duty chat in a minute. But what do you think about the prices, Dave, though?
I think you're right. Personally, I do think the new lower deposits that are in place now are going to help boost that market, and the ripple effect might have an impact further up the property values. We would hope, I guess, that has a small impact in the maybe the downturn that we see because of the stamp duty. I think at best we'll probably stay plateau this year. If you look at the 12-month picture as a whole.
All right, cool. Chris, he's coming with a comment. Morning, Chris. Do you think there's going to be a huge increase in first-time buyers now? Well, we kind of just answered that. There already is, and I think it's only going to increase, and I'm all for that. If you're a first-time buyer out there and you haven't done this before, or first-time seller, which I am meeting a lot of those at the moment, haven't done this before, get in contact. You need to speak to someone to get the right advice, whether it be me or Dave or whoever. Just, make sure you do that. What do you think, Dave? I know we kind of answered it, but
absolutely. I've spoken to so many people that have bought their first house. They've been trying to sell it, and actually it's been on the market for a year. I know a chap who's got a £200,000 flat. He couldn't sell it for love nor money. Now I think it's going to be a different ball game. So first-time buyers and first-time sellers, I think it's going to be their year. I really do.
Interesting. Like that. Good. We're on the same page. So it's good. Thanks, Chris. Thanks for your comment. Right, Andy Mead, good morning. Is drone imagery good for houses and marketing? I'm not really talking about that today, but I will answer that, Andy Mead. Absolutely. I personally love a bit of drone footage. I think marketing-wise, it's always important. What do you think, Dave?
Oh, I've not really got an opinion, but I like drones, and I can see their imagery is very, very good. It gives a whole different perspective. You can see the size of the plot. It can only be a good thing, can't it?
Absolutely. Right, Andy Humphreys. If first-time buyers are now active in the market, what impact will this have on investors and the rental market? Very good question. Dave, what do you think from a mortgage perspective? What have you seen?
So I'm not so sure about first-time buyers because it's relatively tricky for a first-time buyer, first-time landlord to actually buy an investment property. Banks like you to have a residential or like you to be on the investment market already. But if first-time sellers can move up, it's those lower value properties that the investors like to buy.
Yeah.
So if they're moving on and they're selling their properties to the investors, that's obviously going to open up the market again for the landlords to buy up those cheaper value properties.
Yeah, I agree. Yeah, what impact will this have on investors and the rental market? I think I've seen. I mean, last year I saw quite a lot of few investors come through, and they're looking at properties. They are obviously always trying to get the right deal. I think it's going to have. I don't know. It's a bit of a difficult one because you have got first-time buyers. And if there's a lot of first-time buyers, I always would prefer. I would probably say, an experienced buyer. If there was an experienced buyer to buy a property, just because they've done it before, the ease of process. But at the same time, you've got to have empathy towards first-time buyers, and it's their opportunity to get on the housing market. So it's a bit of a 50-50 for me. So.
The government are trying to make it very difficult for investors. The higher rate of stamp duty, the higher tax penalties if you're a high rate taxpayer on your rent, all sorts of things. They want those properties freed up in the hands of first-time buyers. Generation buy, as we've been hearing this week a lot.
Yeah.
And I don't think they want people to invest and rent those properties out. They're going to make it increasingly difficult.
Yeah, absolutely. Perfect. Right. Thanks for that, Andy. Right. So another topic I wanted to speak about is surveys, mortgage offers, what sort of volume capacity a lender's doing. So let's just take an example. You've got a first-time seller or a first-time buyer that have gone into a property, had an offer agreed, put their mortgage application in. How long are we talking from survey instructed, survey taking place? And there's this big talk about remote surveys that's going around at the moment. Very controversial. Some people agree with it, some people don't. What's your thoughts, and how is that at the moment?
It's good. It's as good as it's ever been. It really, really is. Santander are back into probably 2-3 days processing times. They were at about 3 weeks in 2 or 3 months ago. Answer your question quickly. From the point of application to getting a mortgage offer now, potentially a week to 10 days. For most, I'd say that's average. Yeah. If you can do one of these fabled remote surveys, a desktop valuation, you might have an offer out within 2 days. I've literally had applications in, underwrite that day, automated valuation done, offer out the next day. So nice. It all goes through very, very smoothly with no hitches. It can be much quicker, but average is probably about 10 days at the moment, start to finish.
So I had a scenario recently where a buyer had a valuation go ahead 4 weeks ago, and they said it was a backlog with the lender as to why they haven't issued the mortgage offer. Do you think that's a reasonable excuse? I can tell by your facial expressions, probably not. What do you think's going on there, basically?
If you told me that in June last year, yeah, I'd believe it. But saying that you've got your mortgage valuation report in on the lender's desk and it took a month from then to get the offer, something doesn't sound quite right, unfortunately, Sanjay.
Right. Okay.
That's normally the survey is done simultaneous to the underwriting. Now, there are still lenders that would underwrite first and do that survey afterwards. But either way, once that survey's back, their underwriting work should have been done. So it should only be a matter of days for someone to review it, make sure everything's good, and push the offer button. So it shouldn't take that long.
So if you're a buyer and this is your situation that you're finding, or even a seller and you've got your buyer, this is happening to your buyer, what would you tell them? What would you advise them? Like what if they've not done this before and they don't know how long things are taking, what questions should they ask about it?
So everything's done in stages. And a lot of people say, when do I instruct my solicitor? What happens first? Decision in principle. First of all, talk to a mortgage broker. We tell you how much you can borrow. That in turn lets you know the value you can go out house hunting for. Then we get you a decision in principle, because it's good enough a mortgage broker telling you what you can afford. We need to get that formally agreed by the bank. Decision in principle. That gives you that confidence. You go off, you find your house, and then you come back. We put the mortgage application in. We put the application in probably at the same time you'd instruct your solicitor. So that's kind of the second step, and you do both those things at the same time. Then we get your offer out hopefully within 10 days, and the solicitor does their work at their pace, and you get the keys to the house a couple of months later.
Yeah, no, solid advice. Solid advice. I like that. Right. I want to just jump on because obviously the 5% deposit mortgages aren't available just yet. The 10% are.
We are, yes.
So these have obviously been on a massive increase. I know we spoke this briefly about it last month, and they're massively on the increase. There was quite a lot or quite a few lenders offering that now. Have you seen that increase more? And have you had potential clients do a lot of these 10% deposit mortgages?
Yeah, they're definitely back in the game now. And I wouldn't say more lenders have jumped on the bandwagon, but the interest rates are getting more competitive. So we started this probably nearer the 4% interest rates. And I can't quote exact rates, but Halifax are pretty much market leading out there at the moment, very close to a 3%, 3.0 something, I think, at the moment. Which, again, if you'd been talking to me a year ago, I'd say, ouch, we were probably about 1.89 for a 90%. But compared to when they were introduced only a couple of months ago, we are seeing them fall back down quite quickly, which is a great sign. More competition, more confidence in the housing market. Those rates are starting to drop. It's good.
Amazing. Right. Okay. That pretty much wraps up our snapshot of our March month mortgage update. I don't want to let these drag on too long. Thank you for everyone that's joined in. Thank you for all the questions. Dave, any last words about sort of what your thoughts are for the rest of this month until we see everyone next month?
We touched on the stamp duty, obviously. I think that's going to keep things buoyant. We've heard about that $500,000 holiday being extended till June. 250 grand from then to the end of September. So that's going to ease things as it slows down. I think this month's going to still be quite busy, and I'm hoping the rest of the year is going to follow suit. So positive thinking, Sanjay.
Absolutely. PMA all the way. Positive mental attitudes, my friend Johnny always says. Just read the stamp duty within this week itself since the budget announcement on Wednesday, and we kind of knew on Tuesday what was happening with the stamp duty. It's been busy, very, very busy. There is a lot of activity. There is probably I'm still seeing more buyer activity at the moment than houses coming on the market, but I'm sure that will filter through over the next couple of weeks, months, whilst everyone's sort of trying to get in there. But really good news for everyone that's in a transaction. I'm very, very happy about that because some of these cases, it wasn't their fault. I know we all had a deadline, but you can't help sometimes when there are delays with the solicitors and, potential mortgage offers and things like that. So, really positive news. Absolutely love it.
It's good. And even if you don't meet that June deadline, that little extension of the £250,000 increase until end of September, that's going to save somebody $2.5 grand on what they might have paid previously. So it's not to be sniffed at. It's good.
It's a massive amount of money. It's a big chunk of money. I completely get why people want to do that. I think my advice from an agent's perspective, and this is what I say to people when I sit in their living rooms, when I'm doing the valuations and things like, is don't factor in the stamp duty to your move, because it's not guaranteed. You might not make it. And if you are factoring that in, you would have spent a hell of a lot of money, time, effort, stress. And if you don't make it and then it doesn't happen, it's not a good scenario. So really don't put yourself in that situation. But ultimately, we're 3 months, 3 weeks away from it ending and then tapering off. There is an opportunity. There is a chance of doing it, but, don't bank on it. That's what I would say.
Yeah, well, now that extension's in place, hopefully that's going to, help everybody out. And Sanjay, that's a conversation I would always have with people as well. I back you entirely there. We run through what the deposit's going to look like, and I say we've got to factor that in just in case.
In case, always worst case, This is for new transactions, new people that are coming to the market, not existing. So, all good. Right. Thank you for joining, everyone. I really appreciate it. Hope you enjoyed our March mortgage update with myself, Sanjay Patel, and Uncle Dave, as we know him, aka David Howard from AFP Wokingham. If you have any questions and you're watching this on replay, please do pop a message to me or a comment or reach out to Dave. I'd be more than happy to help. And we will see you next month on time this time. And have a great weekend, guys. Cheers,
Thank you, guys. Thank you, Sanjay.
See you later.
Cheers.